Subscribe to LearnCab and hit the bell icon to get notified.
So the issue of the industry is, in the name of simplicity, in the name of ease of doing business for SMEs, they've introduced QRMP scheme, but it is nothing different than a monthly return, because even under the QRMP scheme, on each month-on-month basis, you have to compute what is the amount of output tax, what is the amount of input tax credit according to 36 sub rule 4, and then deposit the differential taxes. When everything needs to be done, and only what is not to be done is punching these figures in the form called as return, there is really no relaxation which is being given. So therefore, now the government has to provide, under the QRMP scheme, the government has to provide some simplicity. They need to provide some mechanism where even if a person wants to opt under the QRMP scheme, it is easier for him to compute the taxes. He need not break his head in finding out output tax, input tax credit as per 36 sub rule 4 and then deposit the taxes. The government needs to give a simple method. The government needs to offer a simple method. So friends, there is a simple method which is being offered to compute the taxes under the QRMP scheme. And friends, please remember, this simple method which is being offered is optional. I repeat, first of all, the QRMP scheme itself is optional. Having gone into the QRMP scheme, there is a simple method which is being offered by the government to compute the taxes to be deposited in the first and second month of the quarter. This simple method also is optional. If a registered person wants, he can choose QRMP scheme. Even under the QRMP scheme, for the first and second month of the quarter, he can do the self-assessment itself. The self-assessment, what we have discussed so far, this also can be done, but if he finds this method to be complex, he can choose a simple method. But let's have a look at what is the source of this simple method. Is the government empowered to give a simple method for payment of taxes for the first and second month? Let's have a look. 39 subsection 7, which speaks about payment of taxes. The proviso to 39 subsection 7, provided that every registered person furnishing return under 39(1) proviso, he'll pay the tax due taking into account inward and outward supply of goods or services or both, input tax credit availed, tax payable and such other particulars during a month. So this is what is self-assessment method. In such form and manner and within such time as may be prescribed. What is the time which is prescribed? We have already seen. The government can also prescribe in which manner you need to compute the tax which needs to be deposited. One manner we already know, it is self-assessment. It is nothing new. Your regular output tax minus RTC according to 36 sub rule 4, deposit that. But additionally, the government is also empowered. The government is also empowered to offer a simple method. And that simple method is called as fixed sum method. That simple method which is being offered by the government is called as a fixed sum method. Friends, there are two methods under the QRMP scheme. I repeat, there are two methods under the QRMP scheme. One is the self-assessment method, which we have already seen, which means you do the regular thing how we are going to do in the monthly filing. The second one is a fixed sum method. Let's have a look. What do we mean by fixed sum method? So notification 85/2020 gives a special procedure to compute the tax which is to be deposited in the cash ledger for the first and second month of the quarter under which QRMP scheme is operating. So now friends, this particular person who is opted for QRMP scheme may. What is meant by may? It means this special procedure is optional. If he wants, he could go under the regular self-assessment basis for computing the tax which needs to be deposited for the first and second month. So this particular person may, in the first month or second month or both the months of the quarter. So friends, this method is optional. He can either choose it in the first month, or he can choose this method for the second month, or he can choose this method for both the months. He may, in the first or second or both the months of the quarter, follow the special procedure that the said person may deposit an amount in electronic cash ledger equivalent to 35% of the tax liability which is paid by debiting the electronic cash ledger for the preceding quarter where the return is furnished quarterly. So they say you follow historical method. for the preceding quarter, assuming in the current quarter, assuming let's say for the quarter April, May, June, you are there under QRMP scheme. Now for the month of April, for the first month of the quarter, you need to calculate what is the amount of tax which you need to deposit in the electronic cash ledger. So they say you might have filed the return in the preceding quarter. You take the return of the preceding quarter, Jan, Feb and March, find out what is the amount of tax which you have paid by debiting the electronic cash ledger. For January, February, March, you would have filed GSTR 3B for that particular quarter. For that particular quarter, total liability minus total input tax credit, whatever is the difference, you would have paid by debiting the electronic cash ledger. Now the amount which you have paid by debiting the electronic cash ledger multiplied by 35%, that would become your first month's liability. I repeat, you are there under QRMP scheme for a quarter, let's say April, May, June. Take the preceding quarter, Jan, Feb, March. For the quarter Jan, Feb, March, you might have filed GSTR 3B. Of the total liability for the quarter, what is the amount of liability which you have paid by debiting your cash ledger? Multiplied by 35%. Why are they saying multiplied by 35%, friends? Because that liability is for 3 months. You need to find out the liability for 1 month. Therefore, average should be somewhere 33.34%. They are rounding it off to 35%. I repeat, whatever you have paid by debiting the electronic cash ledger for the preceding quarter's return, that one is for 3 months. You need to find out how much you are supposed to pay for April. In our example, in GSTR 3B of Jan, Feb and March, the amount which has debited your electronic cash ledger is for the month of Jan, Feb and March. Now you need to find out what is for April. So you take it as 35% of that amount. So friends, 35% of the tax liability which is being paid by debiting the electronic cash ledger. Friends, please understand, do not commit any mistake over here. You need not compute 35% of the total liability. You have to compute 35% of that liability which is paid by your cash ledger. Because what you are going to find out is what amount you have to pay from your cash ledger. For the month of April, the amount which you need to pay from your cash ledger, what you are doing in the preceding quarter of the total amount which is paid from your cash ledger multiplied by 35%. Now friends, the next question comes, what if? What if the preceding tax period for which return is being filed, it was a monthly return? I am coming under the QRMP scheme from April, May, June onwards. For Jan, Feb and March, I did not file a quarterly return. I have filed a monthly return. For the tax period March, my 3B was a monthly 3B. So will I still take for the preceding tax period, which is March, the return which I have filed, whatever amount which I have paid from electronic cash ledger multiplied by 35%? The answer is no. Friends, what was the logic of 35%? When it is for 3 months, for 1 month they have taken 35%. Now friends, in the preceding tax period, which was a monthly return, the amount which you have paid by debiting the electronic cash ledger is for that one particular month. So therefore, if the preceding tax period you had filed a monthly return, whatever amount which you have paid by debiting the electronic cash ledger, 100% of it you deposit it for the month of April in this example. So friends, the tax liability which is paid by debiting the electronic cash ledger for the last month of the immediately preceding quarter where the return is furnished monthly. So in simple terms friends, if your return is quarterly, preceding quarter, I am saying if your preceding quarter return was quarterly, whatever amount you have paid by debiting the electronic cash ledger multiplied by 35% for the first month, second month also same 35%. If your preceding tax period's return was a monthly return, whatever amount of tax liability you have paid by debiting the electronic cash ledger, 100% of that will be for the first month and the same 100% is going to be for the second month. So this is the special mechanism which is being offered. Here you need not calculate your output tax, you need not calculate your input tax credit, you need not look into GSTR 2B, you need not compute 36 sub rule 4 calculations. All that you need to do is take the preceding return. Check, is it a quarterly return or a monthly return? If it is a quarterly return, for the entire quarter, when I filed the return, what is the amount which is paid by debiting my cash ledger multiplied by 35% my liability for the first month. Same amount is going to be the liability of my second month. Third month, friends, for third month, please understand there is no deposit which is required in the cash ledger. You have to compute the liability of the entire quarter and discharge it while you are going to file the returns. And if my return happened to be a monthly return in the preceding tax period, take that particular return, whatever amount I have paid by debiting the electronic cash ledger, that amount I'll deposit for the first month, the same amount I'll deposit it for the second month. For the third month, the same answer, I need not deposit any amount, compute the liability for the total quarter, and output tax minus input tax credit according to 36 sub rule 4, difference amount payable through cash ledger, subtract the amount which is already being paid for the first 2 months, difference amount paid. I am sure you are able to follow this. So friends, this is a simple method or a special procedure. We can call it as a fixed sum method. Why fixed sum method, friends? In this special procedure, the amount which you are going to pay is a fixed sum. It is a percentage of the liability which you have discharged through your cash ledger based in the preceding tax periods. And the amount of tax which you are going to pay is going to be fixed for the first month as well as second month. The amount is going to be the same. When you are going to calculate the liability for the first month, same calculations. When you are going to calculate the liability for the second month, same calculations, same amount. I am sure you are able to follow this. So friends, the summary is, if the preceding quarter return is quarterly, if the preceding tax period was quarterly return, for the first and second month or both the months, 35% of tax paid by e-cash ledger in the return of the preceding quarter. If it was monthly, 100% of the tax paid by e-cash ledger in the return of the preceding month. Now friends, let's say tax period is April, May, June. The total liability is 10,000. Discharge through credit is 8,000. Discharge through cash is 2,000. Now friends, for the month of July, we are going to compute. Let's assume for July, August, September, you are under QRMP scheme. For the month of July, you got two options, either self-assessment or fixed sum method. Either self-assessment or fixed sum method. If you are going under self-assessment, you need to compute the actuals, what is your total output, what is ITC, pay the difference. If you are going under the fixed sum, you need to check historical data. Historically, in the preceding tax period happened to be a quarterly period. So therefore, total liability is 10,000, credit is 8,000, cash is 2,000. So friends, for the month of July, are you supposed to pay 100% or 35%? It is 35% because the preceding tax period was quarterly. Now 35% of total liability? The answer is no. 35% of the amount which you paid from your electronic cash ledger, because now what are we arriving at? We are arriving at a figure, the amount which needs to be deposited in your cash ledger. So therefore we are seeing in the preceding tax period how much amount we have paid through the cash ledger. The same pattern is being adopted in this particular tax period as well. So 2000 multiplied by 35%, 700 needs to be deposited. Now friends, assuming if the preceding tax period was a monthly return, that means you need to calculate for July, but when you check the preceding tax period for April, May and June, you are not under QRMP, you are under MRMP, monthly return, monthly payments. For June, you had filed a monthly return. So now friends, total liability 4,000 in that return, paid through credit 3,000, paid through cash 1,000. So friends, what is the amount which you need to deposit in your cash ledger? It is going to be 100%. Whatever amount which was deposited, whatever amount which was debited in the electronic cash ledger in the return for the preceding month, the same amount you need to deposit in the first month of the quarter under QRMP scheme. So now friends, you found out this for July. What is going to be for August? Fixed amount. Whatever you deposited for July, the same amount will come even for August. Why so? Because even for August, you are going to check the preceding tax period. What is the preceding tax period? April to June. Even for August, you need to check the preceding tax period. Preceding tax period, it was June. So therefore, friends, you are going to get the same answer even for August. So friends, for the first and second month of the quarter, this is the special procedure which is that it is a fixed sum method. So friends, 35% of tax paid by e-cash ledger in the return of the preceding quarter, 100% of tax paid by e-cash ledger in the return of the preceding month. Now friends, let's take an example. Let's say for April, May and June, amount which is paid through cash ledger is 10,000, which means that you are supposed to find out for July and August. You are supposed to find out for July and August. The preceding tax period April, May and June was under QRMP scheme. So amount which was paid was 10,000. Amount paid by debiting the electronic cash ledger. Amount paid by debiting the electronic cash ledger was 10,000 for April, May and June. Now for the month of July, I need to find out. So since my preceding tax period was a quarterly affair, I am going to take 35% of the amount which is paid by debiting the electronic cash ledger. So 10,000 multiplied by 35%, 3,500 I need to pay for the month of July. What is the due date? 25th of August. This is called as fixed sum method. For the month of August, the very same 3,500, because now what is the preceding tax period? Friends, please understand, for the month of August, your preceding tax period is not July. Please understand that. For the month of August, your preceding tax period is April to June. Why not July? July is a part of the current tax period. July, August, September is a component of the current tax period quarter. It is not your preceding tax period. Preceding tax period for August is going to be April, May and June. Please understand, friends. As regards as the quarterly return is concerned, your tax period happens to be quarterly. So July, August and September are the current tax period. So for the month of August, the very same 3,500 I am going to deposit. Fixed sum. The due date happens to be 25th of September. Now friends, for the month of September, should I again deposit the same 3,500? The answer is no. Friends, please understand, for the first and second month of the quarter, you need to make a deposit in the electronic cash ledger. For the third month of the quarter, you need to pay the taxes along with the return which you are going to file. You need to pay the taxes along with the return which you are going to file. So friends, please keep this in your mind that even under the special procedure fixed sum method which is being offered under the QRMP scheme, the fixed sum is applicable only for the first and second month of the quarter. For the third month of the quarter, it is always self-assessment method. First and second month, you have a choice to pay through fixed sum, but for the third month, it is always going to be self-assessment method. So friends, for the month of September, now you take and compute the data of the entire quarter. September month is over, you're in October now. So in the month of October, you take the data of the entire quarter. Say for the entire quarter, your output tax was 20,000. Input tax credit according to 36 sub rule 4 is 12,000. Now we are talking these figures of the entire quarter, July, August and September. So now friends, what is the amount which needs to be paid from your electronic cash ledger? 20,000 minus 12,000, in total 8,000 has to be paid from the electronic cash ledger. How much have you already paid? I have already paid 3,500 plus 3,500, 7,000. So this difference, 1,000 rupees you are supposed to pay from your electronic cash ledger. You will compute and include all these figures in the quarterly return and pay this amount of 1,000 when you are going to file this return on 22nd of October. This is how QRMP scheme is going to function under the fixed sum method. I am sure you are able to follow this. Now friends, let's go to the next quarter. So we have completed July, August, September. The next quarter is October to December. The next quarter is October to December, wherein you need to find out for the month of October what is the amount you need to deposit in your electronic cash ledger under the fixed sum method. So what do? You take the preceding tax period. What was the preceding? What is the current tax period? October, November, December. What was the preceding tax period? July, August, September. Because preceding tax period also was quarterly affair only. He was there under QRMP scheme. So preceding tax period is July, August and September. Now friends, in the preceding tax period, what is the amount which he has paid by debiting the electronic cash ledger? Friends, please concentrate. When he would have filed the return for July, August and September, he would have told 20,000 is output tax, 12,000 is ITC, 8,000 needs to be paid by debiting the electronic cash ledger. How? Just visualize how the scenario would have been. 8,000 to be paid from your electronic cash ledger. 35 plus 35 already available as a deposit in the electronic cash ledger. It is not yet debited from the electronic cash ledger. I repeat, 35 and 35 is only deposited in the electronic cash ledger. It is not yet debited from the electronic cash ledger. That debit would be done only when the return for July, August, September is going to be filed. So now friends, just visualize, he would say 8,000 is payable from the cash ledger, 7,000 is already available as a deposit in my cash ledger, 1,000 I will additionally deposit in the cash ledger, and this 8,000 rupees which is now there as a balance in my cash ledger, I will debit it to discharge my liability of July, August and September. So friends, what is the amount which is being paid by debiting the electronic cash ledger for the preceding tax period? It is 8,000. So 8,000 multiplied by 35%. 2,800 he is going to deposit it for the month of October. He needs to pay by 25th of November. Similarly, for November also it is going to be 2,800. For December, friends, it is not 2,800. He needs to check the data of the entire quarter, do self-assessment, output tax minus input tax credit according to 36 sub rule 4, difference tax, whatever is payable from the cash ledger, if any, what is the amount which is already deposited, and deposit the difference tax amount, and then file a return and debit the electronic cash ledger to discharge the liability for the entire quarter. I am sure you are able to follow this. Let's take another scenario. Now friends, let's say April, May, June, he was under QRMP scheme. Tax paid by debiting the cash ledger, 10,000 for the quarter April, May, June. Comes July. July, since the preceding tax period was quarterly, he takes 10,000 multiplied by 35%, 3,500. Under QRMP scheme, fixed sum method, he deposits by 25th of August. For August, same 3,500 deposits by 25th of September. For September, he is not going to deposit 3,500. He is going to compute the liability for the entire quarter. He computes the liability for the entire quarter. Output tax is 20,000. Input tax credit according to 36 sub rule 4 is 15,500. So here we go, 20,000 minus 15,500, 4,500 for the quarter. I repeat, for the quarter, 4,500 is the amount which needs to be deposited or which needs to be paid from the electronic cash ledger. 4,500 is the amount. Now friends, how much has he already deposited in the cash ledger? He has already deposited 35 plus 35, 7,000 in the cash ledger. But how much is actually payable? Actually payable is only 4,500. Friends, I am sure you are able to appreciate this, that why the government has asked you to just deposit it in the electronic cash ledger, because whatever you are going to deposit is only going to be a tentative amount. When you are going to consider the calculations for the quarter as a whole, this amount is going to change. So therefore, in this example as well, as we can see, 7,000 rupees is the amount which is already deposited. How much is actually payable through cash ledger for this particular quarter? 4,500. So friends, he is going to file a return. He is going to say 4,500 is actually payable. What is already deposited is 7,000. Can he claim a refund of this 2,500? The answer is yes. He can file a return and then claim a refund, or first claim a refund and then file a return? I'm sure you already know this. The amount which is deposited for the first and second months will be available for a refund only after the return for the particular tax period is being filed. So let him file the return, and then whatever is the excess 2500, he can make an application of refund of this and he can get the amount refunded. So friends, this is how the fixed sum method is going to work. Let's just extend this case. Now friends, let's say we are talking about October, November, December. We are talking about October, November and December. Now friends, please tell me, for the month of October, November, December, he is still continuing under QRMP scheme. October, November, December is continuing under QRMP scheme. Now please tell me friends, for the month of October, what is the amount which needs to deposit in his electronic cash ledger? Let's check the preceding tax period. Preceding tax period was quarterly. So let us find out what is the amount for the preceding quarter which was paid by debiting the electronic cash ledger. Now here there are chances that one might go wrong. Friends, if you carefully look into the preceding quarter, what is the amount which you have deposited in the cash ledger? 7,000. But friends, is the notification requiring you to pay 35% of the amount deposited in the cash ledger in the preceding quarter? The answer is no. The wordings are, you pay 35% of the amount which is paid by debiting the electronic cash ledger. It doesn't say 35% of the amount deposited in the preceding tax period. It is 35% of the amount which is paid by debiting the electronic cash ledger for the preceding tax period. So now friends, in the preceding tax period, although you have deposited 7,000, but friends, what is the amount which is paid by debiting the electronic cash ledger? Friends, output is 20, input is 15,500, 4,500 rupees is going to be debited from your electronic cash ledger. What is the amount which is credited, which you have deposited in the cash ledger? 7,000. But out of 7,000, how much gets debited? Only 4,500. What is remaining? 2,500. That you can apply for a refund. Yes, you are entitled to apply for a refund. But the question is, what is the amount which is paid by debiting the electronic cash ledger? It is only 4,500. The difference 2,500 is still lying as a credit in your electronic cash ledger, for which you are entitled for a refund after you file this return. So now friends, the total amount which is being paid by debiting the electronic cash ledger is only 4,500. So here we go, 4,500 multiplied by 35%. 4,500 multiplied by 35%, 1575. This is the amount which needs to be paid for the tax period October. For the tax period November, the same thing, 4,500 multiplied by 35%, 1575. 4,500 multiplied by 35%, 1575 needs to be deposited in the electronic cash ledger for the month of November. So friends, the point which we are trying to understand by help of this example is, for the first and the second month, under the special procedure under the QRMP scheme, the amount which is required to be deposited in the electronic cash ledger is either 35% or 100%, as the case may be. 35 if the preceding tax period was quarterly, 100 if the preceding tax period was monthly. Either 35 or 100% of what? Of the amount which is deposited in the cash ledger? No. Of the amount which is debited from your electronic cash ledger. I'm sure you're able to follow this. Friends, let's just stretch this example. The very same example we are continuing. 7,000 you deposited, but actual liability which was required to be paid was only 4,500. So the difference 2,500. Are you entitled for a refund? Yes. When can you make an application? After you file the return. After you file the return, you make an application of refund of 2,500 rupees. Now friends, keep this discussion besides for a moment. For the month of October, what is the amount which you are supposed to pay? As we discussed, 4,500 multiplied by 35%, which is 1575. You are supposed to pay 1575. You are supposed to deposit in the cash ledger 1575. Now friends, please tell me, am I going to do double work? I have a deposit in my cash ledger already, excess balance in my cash ledger 25. I'll make an application for refund. I'll do a process. I'll get the refund amount. After I get the refund amount, after a few days, again I have to deposit 1575. Or can I have a system where the amount which is already lying in the cash ledger, let it be so. I don't want a refund. Amount which is lying in the cash ledger, let it be so. I do not want a refund. What is my liability which I need to deposit in the cash ledger in the next month? 1575. Adjust this amount. 25 already there. Out of 25, it is my money which I am entitled for refund because return is being filed. 1575, I need to make a deposit. I don't want to do the process of first take from the government, keep it for some days and then again make a deposit. Let the 25 be there, but I'll ask the government, you please adjust this 1575 against this 25. Is this possible? Let's have a look. The proviso. Provided that no such amount may be required to be deposited. Which such amount of deposit it is speaking about? For the first month. Provided that no such amount may be required to be deposited for the first month of the quarter, where the balance in the electronic cash ledger is adequate for the tax liability for the said month. Now, whether the balance in the electronic cash ledger 25, which is lying as a credit, which I have not yet applied for refund, is it adequate to discharge my liability of 1575? Yes. In this case, if I am ready to keep 25 continuing in my cash ledger, I need not deposit additionally 1575. Are we clear? Yes. What about the second month? Second month, what amount am I actually required to pay? It is again the same thing. 4,500 multiplied by 35% is equal to 1575. Now, is there any balance which is already lying in the cash ledger? Yes. How much is lying? 25. I have not yet applied for a refund. I have not yet applied for a refund. 25 is already lying in my cash ledger. Now, out of this 25 which is already lying in cash ledger, can I again say you adjust that 1575 also against that 25? Now I cannot say that. The reason being, this 1575 of October is already adjusted. Adjusted means nothing is going to get debited. You just need to have a calculation. 25 is available, 1575 need to deposit. I'll not deposit anything extra. There is nothing such adjustment which is going to take place in the portal. It only says that if your cash ledger balance is sufficient, you need not make any additional deposit. This is what the law tells. This is what it tells. You can have a look. For the first month of the quarter where the balance in the cash ledger is adequate, deposit is not required to be made. Now this is for the first month. Now for the second month, should it speak cumulatively for the first and second month? Should it say the balance which is lying in the cash ledger should be adequate to cumulatively meet the liability of the first and second month? Yes. Let's have a look. For the second month of the quarter, where the balance in the cash ledger is adequate for the cumulative tax liability for the first and second month. In this example, whether the balance which is there in my cash ledger is adequate for the cumulative liability of my first and second month. For the first month, yes, it was adequate. For the second month, friends, 1575 multiplied by 2, I need to deposit 3150. The amount which is there is only 2500. So therefore, friends, now I will have to deposit an amount of 650 by 25th of December. I'm sure you're able to follow this. I already had 2500. For the first month, my liability was 1575. The balance was adequate. For the second month, now my cumulative liability is how much? My cumulative liability is 3150. The amount which is lying is 2500. So the difference amount of 650, I need to deposit it by 25th of December. So now I am able to comply with the provisions of this notification. I am sure you are able to follow this. Let's take another case. Let's say, friends, July, August, September, the registered person was under QRMP scheme. He paid an amount through cash ledger, 10,000. He paid an amount by debiting the cash ledger, 10,000. Now comes October, November, December. this gentleman again under QRMP scheme. For the month of October, what is the amount which he needs to deposit in his cash ledger? We see preceding tax period is quarterly, yes, quarterly. 10,000 multiplied by 35%. Ideally, he has to deposit 3,500. If he is going under the special procedure, he needs to deposit 3,500. I repeat, if he is going under the special procedure, he has to deposit how much? 3,500. Now friends, the story is, for the month of October, he has not made any taxable supply. For the month of October, he has got nil supplies. He has not made any supplies at all. Should he still deposit this 3,500? The same scenario for November as well. For November also, ideally he should deposit 3,500. But for the month of November, nil supplies. No business at all. Should he still deposit this 3,500? Friends, for the month of October, he should deposit this 3,500 by 25th of November. Now, in the month of November, does he know that in October I don't have any business? Yes. For the month of November, he needs to pay tax in the December. When he's standing in December, does he already know that he has got no business in November? Yes. Will it not be too much to demand a tax from a person, the amount to be deposited in the cash ledger, when he has not done any business in the first and the second month? Yes. Let's have a look. Do we have any relaxation over here? It says, provided that no such amount may be required to be deposited for the first month of the quarter where there is nil tax liability. Similarly, for the second month of the quarter where there is nil tax liability. So friends, we have learnt two things. We know there's a special procedure for the first and the second month. On a fixed sum method, you need to deposit certain amounts in the electronic cash ledger. But however, the deposit would not be required in two scenarios. The deposit would not be required in two scenarios. What are those two scenarios? Scenario number one, if the balance which is available in the cash ledger is adequate, then deposit is not required. Scenario number two, if you have nil tax liability either for the first month or for the second month, deposit is not required. I'm sure you're able to understand this. So friends, this is the story so far. What we have seen, there's a special procedure. If the preceding tax period is quarterly, 35% of tax paid by debiting the e-cash ledger in the return of the preceding quarter. If the preceding tax period was monthly, 100% of tax paid by e-cash ledger in the return of the preceding month. Above amounts is not required to be paid if adequate balance is available in the cash or credit ledger. We have discussed a case of cash ledger. If the very same adequate balance is available even in the credit ledger, still you need not deposit any additional amount. And in case of nil liability. Friends, we have seen an example of cash ledger. If you have adequate sufficient balance available in the cash ledger, you need not deposit any amount. The same thing holds good even for credit ledger. If in the preceding tax period, after you have filed the return, if there is any credit amount which is getting carried forward to the next month, if that is sufficient, then you need not deposit any amount in the cash ledger for the current tax period. So friends, whatever we have discussed in last half an hour or so, if you remember this is more than sufficient. There's nothing more than this what we have discussed. Now friends, so far we have seen 35% needs to be deposited, 100% needs to be deposited. This deposit needs to be made tax headwise. This deposit needs to be made tax headwise. Say for example, tax paid by debiting the electronic cash ledger for the month for the tax period Jan to March, CGST 100, SGST 100, IGST 100, cess was 50. These were the amounts which were paid by debiting the electronic cash ledger for the tax period Jan to March. So now friends, tax to be paid in April and May, the first and second month of the quarter, the first and second month of the quarter, April to June. So CGST is going to be 35, SGST is going to be 35, IGST is going to be 175, cess is going to be 17.5. So long we have discussed it in toto. Now we understand it needs to be deposited tax headwise. Now if the tax which was paid in March, assuming March was a monthly return and not a quarterly affair, in those cases, assuming you had paid 50, 50, 80, cess you did not pay anything, then April, May and June if you are under QRMP scheme, then for the first and second month you need to make a deposit, and if you are following the special procedure of fixed sum method, in those cases you will have to pay CGST 50, SGST 50, IGST 80, 100% of whatever you have paid by debiting the electronic cash ledger for the preceding tax period, and in this case the preceding tax period was monthly, so therefore it is 100%. We are discussing special procedure fixed sum method under the QRMP scheme. Let's take an example. Let's say compute under QRMP special procedure. Under QRMP scheme, tax to be paid under special procedure, which is fixed sum method, for the quarter April to June. Information additionally which is given is registration was obtained on 5th of April. We are supposed to compute the fixed sum method amount to be deposited in cash ledger for the first and second month of the quarter April to June. The information which is additionally given is registration was obtained on 5th of April. Now friends, the first question is, if I have obtained registration on 5th of April for the quarter April to June, first of all, can I come under QRMP scheme? Because only if I can come under QRMP scheme, only then the next question comes whether should I pay under self-assessment or should I go under fixed sum method. Can I come under QRMP scheme? Friends, for the quarter April to June, what is the date within which you will have to opt for the QRMP scheme? Friends, please remember the trick. For April, the month of April ends on 30th of April. So from 1st of May, you will have to decide whether you need to file GSTR 1 or you need to file IFF. So therefore, you will have to decide by 30th of April. So the cutoff is 30th of April. What was the cutoff for the preceding quarter? Jan, Feb, March, it was 31st of Jan. Agreed. So from 1st of February till 30th of April, I can opt for the QRMP scheme for the quarter April to June. Let's have a revisit. For the quarter April to June, between 1st Feb to 30th April, QRMP can be opted for. So registration is obtained on 5th of April. Immediately on obtaining registration on 5th of April, can I choose to operate under the QRMP scheme? The answer is yes. I have got time till 30th of April. Agreed. Now comes the next question. Find out what is the amount of tax which needs to be deposited in the cash ledger for the first and second month of the quarter under fixed sum method. Under fixed sum method. What does fixed sum method say? Take preceding tax period. If it is monthly, 100% of the amount which is paid by debiting the electronic cash ledger. If it is quarterly, it is going to be 35%. But friends, do we have a preceding tax period over here? Do we have a preceding tax period over here? Now, the amount which you are going to deposit, it is going to pertain to the tax for the month of April. April is the first month for this registered person, not of this financial year. As a registered person itself, this is the first month for him. He doesn't have any history because he has obtained registration on 5th of April. What is he going to do? He is going to take 100% of what? 35% of what? Is it possible? The answer is no. In this case, fixed sum method is not possible at all. Please listen to the words very, very carefully. In this case, is it that QRMP is not possible? The answer is no. QRMP is very much possible. The window is still available. To opt for QRMP and to pay under fixed sum is not possible. He can opt for QRMP and pay under self-assessment. He can opt for QRMP and pay under self-assessment. It is only that he cannot pay under fixed sum because there is no data of preceding tax period which is available, multiplied by 100%, multiplied by 35% of what? There is nothing which is available. So therefore friends, the notification further reads, provided further that the registered person shall not be eligible for the said special procedure. It doesn't say will not be eligible for QRMP. He will not be eligible for the said special procedure, the fixed sum procedure, unless he has furnished the return for a complete tax period preceding such month. So now friends, preceding the month of April, has he furnished a return? The answer is no. So therefore, can he opt for QRMP? Answer is yes. Does it mean there is no QRMP? No. QRMP is available. He cannot pay tax under special procedure or fixed sum method. he has to pay under the self-assessment method. So friends, let's try to enhance our understanding. If the registration is obtained on 1st of February, if the registration is obtained on 1st of February, for the quarter Jan to March, question number 1, can he come under QRMP? Please follow the facts very carefully. Registration obtained on 1st of February, for the quarter Jan to March, can he come under QRMP? It's simply no, because if you want to operate under QRMP for January to March, you should opt for the scheme by 31st of January, because for January to March, the date is 1st November to 31st of January. So by 31st of January, you should have opted for this scheme. This person has taken registration itself on 1st of February. How will he opt by 31st of January? Not possible. For the quarter Jan to March, whether QRMP is possible? Not possible. If QRMP is not possible, where is the question of payment by fixed sum or payment by self-assessment? This becomes not applicable, because either fixed sum or self-assessment is a method of discharging or depositing the amount in cash ledger under the QRMP scheme. When QRMP itself is not possible, these factors become irrelevant. Second part of the question. Registration is obtained on 1st of February. For the quarter April to June, can he operate under QRMP scheme? Now friends, for the quarter April to June, what is the window which is available? The window which is available is 1st of February till 30th of April. Assuming within this window he is opting. Within this window which is available, by 30th of April he is operating or he is opting to pay taxes under QRMP. So QRMP is possible? Yes. Whether self-assessment is possible? Self-assessment under QRMP is always possible. Whether fixed sum is possible? Friends, as regards as fixed sum is concerned, what is the criteria? The criteria is he should have furnished the return for the preceding tax period. Now friends, in this case, we are talking about tax period April to June. We are talking about fixed sum method for April. Was he in existence for the tax period March? Yes. In the month of March, was a return to be filed? Yes. Assuming he has filed the return. In those cases, can he opt under the fixed sum method? The answer is yes. Example number 2. Assuming registration is obtained on 5th of April. Assuming registration is obtained on 5th of April and the question is concerning for the quarter April to June. Question number 1, can he opt for QRMP? Friends, QRMP for the quarter April to June can be opted by 30th of April. On 5th of April, he obtained registration. Immediately if he wants, he can opt for QRMP for the quarter April to June. Yes. Whether self-assessment is possible? Once you have opted QRMP, always self-assessment is possible. Yes. Whether fixed sum is possible? Friends, does he have any history? The answer is no. He obtained registration in 5th of April. He wants to deposit an amount in the cash ledger for the month of April. Precedingly, has he filed any return? The answer is no, because he started his journey as a registered person only from 5th of April. So therefore, special procedure is not possible. So friends, I am sure by now you are able to differentiate between am I eligible for a QRMP scheme is a different question. Am I eligible to pay taxes under the special procedure under the QRMP scheme is a different question. I am sure you are able to differentiate this by now. Now friends, let's take an example. Let's say you need to compute the amount which needs to be deposited. You need to compute an amount which needs to be deposited in the electronic cash ledger under the fixed sum method for the first and the second month. The quarter is April, May, June. Now friends, registration was obtained on 15th of March. Registration was obtained on 15th of March. Now friends, when registration was obtained on 15th of March, for the particular month of March, obviously he would have filed a monthly return only. Why so? Because for January, February, March, if you want to go under quarterly scheme, you should have chosen by 31st of January. This fellow has obtained registration itself on 15th of March. So by default on 15th of March when you obtain registration, for March it would have been a monthly return. Now friends, from 15th of March till 31st of March, whatever activities he has undertaken, he has filed the return. The amount of tax paid by debiting the electronic cash ledger for the month of March is rupees 10,000. Now friends, please tell me, for the quarter April to June, he wants to operate under the QRMP scheme. Can he do so? Yes, till 30th of April he got an option to do so. So April, May and June he operates under QRMP scheme. For the month of April, he needs to make a deposit in the electronic cash ledger and he wants to do it under the fixed sum method. What does fixed sum method say? Check the preceding tax period. Is it monthly or quarterly? March, it is monthly. Has he filed the return? He has filed the return. 100% of the amount which is paid by debiting the electronic cash ledger, instantly you will get an answer. But friends, let's have a look. Logically, should this be the correct answer? The reason why I am saying is, friends, what is that 100% and 35%? When your preceding tax period was monthly, whatever amount which you have paid by debiting the electronic cash ledger for the entire month, the very same amount you paid now. If your preceding tax period was quarterly, whatever amount which you have paid by debiting the electronic cash ledger for the entire quarter, multiplied by 35%. That was for 3 months. For 1 month it is 33.34. We will round it up to 35. This is the logic. Now please tell me, this 10,000 which he has paid, was it for the entire month or was it for 15 days? Because he obtained registration on 15th of March. It is reflecting his transactions only for 15 days. But now friends, are you going to deposit tax for 15 days or for the entire month of April? You are going to deposit tax not for 15 or 16 days, but for the entire month of April. So friends, should this be taken as a base? The answer is no. Let's have a look. What does the provision say? The provision says that provided further that the registered person shall not be eligible for the said special procedure unless he has furnished a return for a complete tax period preceding such month. What is meant by complete tax period? A complete tax period means in which the person is registered from the first day of the tax period till the last day of the tax period. Now friends, he has filed a return for the month of March, but was the month of March a complete tax period? The answer is no. What is meant by complete tax period? He should have been registered from 1st of March till 31st of March. This person is registered only from 15th of March till 31st of March. So therefore, special procedure is not available. Whether QRMP itself is not available, the answer is no. We are only discussing whether the special procedure is available or not. Here, the special procedure is not available to him. So for the month of April, the quarter April, May and June, he is under QRMP scheme. The only thing is, for him, special procedure is not available. Does it mean no QRMP? No. QRMP is available, special procedure not available. Do the self-assessment, deposit the tax, deposit the amount in the electronic cash ledger. Another scenario. For the quarter Jan to March, this person was a registered person. I repeat, for the quarter Jan to March, this person was a registered person, but he was paying taxes under section 10, composition fellow. This registered person wants to exit from composition tax, wants to exit from section 10 and pay the taxes under the QRMP scheme. He would come into the regular mechanism. In the regular mechanism, assuming his turnover is below 5 crores, he wants to come under the regular mechanism but under QRMP. I am sure you are able to differentiate this, friends. Preceding financial year, Jan to March, he was under composition scheme. From this current financial year, he wants to come under the regular scheme. Is that possible? Possible. Under the regular scheme, what do you mean by regular scheme? Other than composition scheme, section 9. Under section 9, he wants to operate under QRMP. Is that possible? Yes, why not? It is possible. That also is possible. Now friends, for the quarter Jan to March, taxes paid under section 10 was 10,000. Agreed. He exits from composition scheme, wants to enter QRMP scheme for the quarter April to June. Now the question is, for April, what is the amount which needs to be deposited in the electronic cash ledger? Friends, under the special procedure, what it tells you, find out whether the preceding was monthly or quarterly. In this case, composition taxable person deposits or he pays the taxes on a quarterly basis. Yes, on a quarterly basis, this person might have paid how much? He has paid 10,000. So I'll take 10,000 multiplied by 35% and deposit 3,500. Is this a sufficient and is this a logical conclusion which we have arrived at? Friends, please concentrate. The pattern which is there under the special procedure, it is adopting the historical transactions to reflect the current transactions which is being undertaken during the current quarter. Now friends, please tell me, historically in the preceding quarter, he might have filed the return for the preceding quarter. He might have paid taxes amounting to 10,000 by debiting the electronic cash ledger. But those were the taxes which were paid under section 10. Now is operating under section 9. Are they both in comparable terms? Section 10, he might have paid taxes what? 1% or 5%. Had he been under 10 to some 6%. Now friends, those taxes he would have paid without considering input tax credit. Agreed. Now he is operating under section 9. Under section 9, is it comparable? Are the quarters April, May and June in comparison with Jan, Feb and March by any stretch of imagination? The answer is no. So therefore, can you take this historical data? The answer is no, you cannot take this historical data because this is not going to give you any logical answer. Let's see, what does the provision say? The provision tells you, provided further that the registered person shall not be eligible for the said special procedure unless he has furnished the return for a complete tax period preceding such month. Now one may argue, what does it say? Return of the preceding tax period should be filed. I filed the return for the preceding tax period. Why are you not allowing me? Please read the wordings carefully. What does it tell you? Provided further that the registered person shall not be eligible for the said special procedure unless he has furnished the return. Unless he has furnished the return. What do you mean by the return? Now friends, which return are you talking about now? You are talking about GSTR 3B. Please understand, under QRMP scheme, a person is going to file GSTR 3B. In the preceding tax period for the Jan to March, he might have filed GSTR 4 composition fellow. Has he filed the return GSTR 3B? The answer is no. Friends, they are talking about GSTR 3B return. What you are filing for the quarter is 3B. So what needs to be filed or what should have been filed in the preceding tax periods should also have been GSTR 3B. So therefore they are saying the return. I read it again for you. Provided that the registered person shall not be eligible for the said special procedure unless he has furnished the return for a complete tax period preceding such month. In this case, friends, in the preceding tax period, it was not the return for him, it was not GSTR 3B for him, it was GSTR 4. So therefore, that cannot be taken as a base. So friends, I am sure you are able to follow this. What is the crux of the discussion which we are getting? The crux of the discussion is, when you are going to choose QRMP scheme, under QRMP scheme, when you are opting for the special procedure is based on past data. Special procedure is based on past data. That past data should be in comparable terms. And at the first instance, you should have a past data. special procedure under QRMP scheme is based on past data. So point number 1, past data should be available. Point number 2, past data should be available in comparable terms, where you have obtained a new registration and you have still got a time slot to opt for the QRMP scheme, and you come into the QRMP scheme. After coming into the QRMP scheme, when you want to opt under the special procedure fixed sum, since it is a new registration, you do not have any past data, fixed sum is not available to you. You can go under the self-assessment method. Similarly, you have past data, but either it is for half a tax period or it was under composition scheme. Past data is available, but it is not in comparable terms. So therefore, you cannot opt under the QRMP scheme fixed sum method. I am sure you are able to follow this. Continuing our discussion further, let's take an example. Under the fixed sum method, let's say friends, for the Jan to March, the amount which was paid by debiting the electronic cash ledger was 10,000. Now for the month, for the tax period April to June, for the month of April and for the month of May, the first and second months of the quarter, compute what is going to be the amount which is to be deposited in the electronic cash ledger by fixed sum method. So friends, 10,000 was being paid. The preceding tax period was quarterly. So 35% of it is 3,500 and 35% of it is 3,500 for April and May. For April, it needs to be paid by 25th of May. The amount is deposited well in advance on 24th of May. For May, the amount should have been paid by 25th of June. The amount is being deposited on 23rd of June. Now friends, let's say the transactions which have actually occurred. I repeat, the transactions which have actually happened. The transactions for the month of April, actual was output GST was 50,000, input tax credit was 45,000, which means that ideally 5,000 rupees should have been paid. I repeat, output GST was 50,000, input tax credit was 45,000. Ideally 5,000 rupees should have been paid under self-assessment. Friends, now we have done with this. We are just analyzing that what were the actual transactions for the month of April. For the month of April, the taxpayer compares it with his actual transactions. 45,000 is the input tax credit and 50,000 is the output GST. So friends, 5,000 was his actual liability. How much has he paid? He has paid 3,500 under fixed sum method. The question is, should he pay any interest? The question is, should he pay any interest on the short deposit to the extent of 1,500 for the month of April? I repeat friends, for the month of April, under the special procedure, he has deposited 3,500 in his electronic cash ledger. Upon looking into the actual transactions, the amount which should have ideally been paid is 5,000 because output is 50, ITC is 45. 5,000 should have been deposited, but under the fixed sum, the answer which is coming is 3,500. He has deposited this before the due date. The question is, should he pay any interest on the supposedly short deposit which is being made? Friends, what was the reason behind introducing this special procedure? The reason behind introducing this special procedure is to save the time of the taxpayers in doing the actual calculations. If they had to do the actual calculations each month, they would have very well gone under the monthly return, monthly payment scheme. So to save their time from the calculations, to reduce their compliance burden, this fixed sum method has been introduced. And now if you are going to ask this person that under fixed sum you have paid only 3,500, actual liability to the extent it was 5,000, so therefore you pay an interest on it, is it going to be a logical demand? The answer is no. So friends, under the fixed sum method, if you have opted for the fixed sum method, whatever might be the actual calculations, you are not bothered. You need not be bothered. Irrespective of the actual calculations, it is sufficient if you deposit the amount which is required to be deposited. In this case, you are required to be deposit 3,500. You have done so within the time. There is no interest liability on you. At times, it may be a case where you have deposited a lower amount. At times, it also may be a case where you end up depositing more amount. Let's have a look at the second month, May. In the month of May, you have deposited 3,500. But friends, what was actually supposed to be deposited according to the self-assessment method? Output is 60, input tax credit is 65,000. You need not have deposited anything had you been under the self-assessment method. So where you are not required to deposit and you have deposited 3,500, is the government going to give you some interest? Obviously no. Similarly, the government also cannot demand interest in a case you have shortfall deposit as compared to self-assessment. Friends, the very intent, the very motive behind introduction of special mechanism, this fixed sum method, is to ease compliance. You just deposit a fixed sum method, forget the actuals, at the end of the quarter, compute the actuals, whatever is the difference, pay the tax before you file the returns. I am sure you are able to follow this. So friends, now for the purpose of computing, when he is going to file the returns, the output GST is 140, input tax credit is 1,30,000, difference payable is 10. Already what he has deposited is 7,000. The difference 3,000 needs to be paid. That also he pays it on 21st of July. There is no interest liability which this person is required to pay. Let's take another example. Jan to March, amount which is paid through cash ledger, amount debited through cash ledger is 10,000. For the month of April, he pays 3,500. For the month of May also, he pays 3,500. For April, it is being paid on 30th of May. For May, it is being paid on 28th of June. Let's have a look at the actuals. Actuals remain same. What we have seen in the previous example. Output is 50, ITC is 45. Ideally, he should have paid 5,000 had he been under self-assessment. For the month of May, 60 is output, 65 is ITC. Ideally, he should not have deposited anything had he been under self-assessment. But he has chosen fixed sum method. So therefore, he has paid 3,500 and he has paid another 3,500. Now both these are paid beyond the due date, 30th and 28th is what they have paid these amounts. Is he liable to pay interest? The answer is yes. Friends, when you have chosen fixed sum method, actuals do not have any relevance. What matters is what is the amount under fixed sum, on which date have you deposited, is there any delay in the deposit? If yes, interest is payable. So friends, now when we compute for the entire quarter April to June, total liability 140, ITC is 130, difference payable is 10, already deposited is 7. What you end up paying through cash ledger further is 3, and this 3,000 is paid on 23rd of July. This 3,000 is paid on 23rd of July. Assuming this to be a category A state, your due date was 22nd of July. Is any interest payable? The answer is yes, interest is payable. Delay in deposit of 3,500 for 5 days, interest at 18% per annum. Delay in deposit of this 3,500 for 3 days, interest at 18% per annum. Delay in deposit of this 3,000 for 1 day, interest at 18% per annum. In toto, you have to pay an interest of rupees 17. So friends, the point which I would like you to take home, the point which we are trying to understand is, as long as you are choosing fixed sum method, actuals do not matter. Actuals do not matter. If you have opted for fixed sum method and if you deposit the amount by due date, there is no interest liability. If you do not deposit the amount by due date, to the extent of delay, you are supposed to pay interest irrespective of actuals. Friends, let's take an example. For the tax period January to March, amount which was paid by debiting the electronic cash ledger is 10,000. The data is given for April to June. Output for April is 50. Input tax credit is 45. For May, output is 60. Input tax credit is 65. Now friends, assuming if I am opting self-assessment method, for the months of April and May, what is the amount which I am supposed to pay? For the month of April, I'll have to pay 5,000. Output is 50. Input tax is 45. I'll have to pay 5,000. For the month of May, I need not pay anything. Output is 60. Input tax is 65. I need not deposit anything in the cash ledger. However, if I was operating under fixed sum method, for the month of April, I would have paid 3,500. Reason being, 10,000 was deposited, 10,000 was paid by debiting the electronic cash ledger in the preceding quarter. 10,000 multiplied by 35%, 3,500 I would pay it in April, 3,500 I would pay it in May. So had I opted fixed sum method, I would have paid 3,500 and 3,500 in each of the months. Now friends, the data of June is available. For June, output is 30, input tax is 20. I have total data for the quarter. Output is 140, input tax is 130. Now friends, GSTR 3B for the quarter April to June. Had I been under self-assessment, 140 is output, input tax is 130, difference payable is 10,000. Now friends, how much have I already paid? I have already paid 5,000 during the month of April. So the difference 5,000 I am supposed to pay when I am going to file the returns for the quarter April to June. Had I been under fixed sum method, output is 140, input tax is 130, 10,000 is payable, it remains the same. Now friends, how much have I already paid? I have already paid 7,000. I have already paid 7,000 under fixed sum. The difference 3,000 is payable now. Now friends, if you would have noticed carefully, whether it is self-assessment or it is fixed sum, ultimately the amount payable to government is 10,000. What changes is only the timing of payment. If I am under self-assessment, first month I paid 5,000, next month I did not pay anything, along with the third month I paid the return which is going to go in the third month, along with the third month's data, I have paid 5,000. So first month 5, next month 0, third month 5. Under fixed sum method, first month 3,500, second month 3,500 and third month 3,000. So friends, ultimately 10,000 goes to the kitty of the government. The only change is the timing, the pattern in which it is going to go. So which one is better? Whether self-assessment is better or fixed sum is better, or do I have another option? What is the other option? Friends, if you look carefully, in the first month, under fixed sum, it was 3,500 which was payable. Under self-assessment, it was 5 which is payable. So for the first month, fixed sum gave me a lower answer. I chose fixed sum method. In the second month when I am going, under self-assessment, I need not deposit anything because ITC is greater than output. But fixed sum, I will have to deposit 3,500. Now, can I take a stand that even though under the first month I went under the fixed sum method, second month I want to remain in the default route, I want to go under the self-assessment basis. To rephrase the question, me as a registered person, am I at liberty to choose fixed sum method whenever I want? Am I at liberty to choose the fixed sum method whenever I want? In the first month, I see fixed sum is lower, I choose fixed sum. In the second month, I see fixed sum is higher, I ignore fixed sum. Am I at liberty as a registered person to have a combo of these two? In the combo, the first month I choose fixed sum, I pay 3,500 because the amount which I am supposed to deposit is lower. In the second month, I know that self-assessment I am getting a lower amount to deposit. In fact, I am not getting anything to be deposited. It is 0. I will not choose fixed sum. Second month, I will remain in the default route, self-assessment. Of course, the work involved is going to be a bit higher. Each month, I will have to compute my taxes under self-assessment and compute the taxes which should come under fixed sum method, compare these both and go with that option which is lower. Of course, the work involved is more, but if this work involved, even though it is more, if it is helping me to manage my working capital in a better way, why I should not opt for it? So friends, in combo, let's say there is a combo 140, ITC 130, difference payable 10. Already paid 3,500. First month, since fixed sum was lower, I went under fixed sum. Second month, self-assessment was lower, I went under self-assessment. So first month I deposited 3,500, second month I did not deposit anything. Third month, total payable 10,000, minus 3,500 already paid, difference payable 6,500. Friends, ultimately whether it is a self-assessment, whether it is a fixed sum, whether it is a combo, the amount which needs to go to the government is 10,000. The difference is only about timing. If I am going for a combo, first month 3,500, second month 0, third month 6,500. So now friends, although combo is a better idea for working capital management, however, does the law permit me to do so? So we come back again to the question that, am I at liberty to choose the fixed sum method whenever I want? Or if I have chosen fixed sum method for first month, I have to follow fixed sum method even for the second month. Or if I did not choose fixed sum method for first month, for second month also, I cannot choose fixed sum method. Is it a scenario where, to rephrase the question, fixed sum method, if I want to choose, I have to choose for both the months, or I cannot choose at all? So friends, now the simple question is, am I at a liberty to choose fixed sum method in whichever month I want? Whenever it is convenient, I'll choose it. Otherwise, I'll leave it. Let's have a look. What does the notification say? Notification tells you the registered persons who have opted to furnish a return for every quarter or part thereof may, in the first month or second month or both months of the quarter, follow the special procedure. So friends, the notification is giving me a discretion. In whichever month I want, either in the first month or in the second month or in both the months, I am at liberty to choose this fixed sum method. So therefore, I can do my working capital management. I can compare. Of course, it would involve an additional work, but I would compare. For this particular month, should I go under self-assessment or fixed sum? For the next particular month, should I go under the self-assessment or fixed sum? And friends, of course, as we all know, for the third month, it is always self-assessment. So friends, the conclusion is something like this. First month, either self-assessment or fixed sum at my discretion. Second month, same way, either self-assessment or fixed sum under my discretion. Third month, always it is going to be under self-assessment. Friends, we have discussed a lot about QRMP scheme. Let's take a break. Let's have a relook at whatever we have discussed so far and then proceed further. So friends, return filing is monthly or it is quarterly. As regards as monthly filing is concerned, the details of outward supplies in GST are 11th of the subsequent month. As regards as monthly GSTR 3B is concerned, the return needs to be filed by 20th of the subsequent month. Taxes needs to be paid by 20th of the subsequent month. As regards as quarterly return filing is concerned, the details of outward supplies in the first and the second month through IFF invoice furnishing facility, 13th of the subsequent month. As we all know, IFF is optional. The value of supplies which can be included in IFF is B2B supplies 50 lakhs. In IFF, you can choose at your discretion which details you want to furnish and which you do not want to. For the third month, the details will be going in GSTR 1, 13th of the subsequent month. GSTR 3B, quarterly. The due dates for return, category A states 22nd, category B states 24th of the month following the end of the quarter. For April, May, June, it is 22nd of July for category A and 24th of July for category B states. You need not remember which state would fit into which of the category. Payment, for the first and the second month, it is 25th of the subsequent month. Deposit by PMT 06. Third month, it is 22nd or 24th of the month following the end of the quarter. It is along with the return. Who can opt for QRMP scheme? Who are those persons who are notified to file their returns quarterly? Those registered persons who aggregate turnover in the preceding financial year is up to 5 crore rupees. Conditions for opting: return of the preceding month as due has to be filed. Option once exercised is valid for future tax periods unless withdrawn. Moment the aggregate turnover in any of the quarter exceeds 5 crore. That means once the aggregate turnover crosses 5 crore in any particular quarter, we are not talking about turnover of that particular quarter. We are talking about the entire turnover, the aggregate turnover. If it is crossing 5 crore rupees, You have to check in which particular quarter it is crossing. Then from the next quarter onwards, you are not in a position to operate under QRMP scheme. When to opt in for a QRMP scheme? It is first day of the second month of the preceding quarter till the last day of the first month of the quarter for which option is exercised. We have studied a tip as to how to remember this. For quarter April, May, June, for April I'll have to decide by 30th of April, because from 1st of May I'll have to either file GSTR1 or IFF. So I get to know the ending point is 30th of April. Similarly, for the preceding quarter, Jan, Feb, March, the last point was 31st of Jan for Jan, Feb and March. So from 1st of February till 30th of April, I can opt for the quarter April, May, June. Now friends, once opted under QRMP scheme, there are two methods using which you can make a payment of tax. Here friends, payment of tax means for the first and the second month, it is a mere deposit in the electronic cash ledger. Such deposit which is being made cannot be used for any other purpose or cannot be applied as a refund till the return for the particular quarter, till the return for the relevant quarter has been filed. So friends, under the self-assessment method, this is a default method. You need not opt anything for. Output tax less input tax credit. This input tax credit needs to be calculated in accordance with 36 sub rule 4. Difference, you need to deposit it. So interest for the first and second month, it will be at 18% on delay in deposit. For the third month, it will be at 18%, same for the delay in payment of tax, because for third month there is no deposit, it is only payment of tax. There is a special procedure, fixed sum method, payment of taxes. Preceding tax period, if it was quarterly, then for the first and second month you need to pay 35% of the tax which was paid by debiting the electronic cash ledger in the preceding quarter. For each of the months, the answer is going to remain the same. If your preceding tax period was monthly, you need to deposit in your electronic cash ledger 100% of the amount which was paid by debiting the electronic cash ledger in the preceding month. Above amounts are not required to be paid if adequate balance is available in the cash or in credit ledger, or if there is a nil tax liability. Special procedure will not be available. This fixed sum method will not be available if the return has been filed for a complete tax period. Which return? GSTR 3B return has been filed for a complete tax period preceding such month. Interest is payable. Yes, interest shall be payable for the delay as follows. For the first and second month, on the fixed sum which is payable if there is any delay in deposit in the cash ledger. For the third month, on the self-assessed amount. On the self-assessed amount, if there is any delay in payment, in that case, interest will be applicable for the third month. So friends, the story so far is only so much. If you remember this, this is more than sufficient. Let's proceed further. Friends, let's say ABC Limited has got its presence in Tamil Nadu, in Karnataka and in Kerala. In Tamil Nadu, it has got two GST numbers, GST1 and GST2. In Karnataka, one GST number. In Kerala, one GST number. Totally, this concern has got 4 GST numbers across India. Now friends, the question is, can ABC Limited, while it is operating in Tamil Nadu, for one GST number, choose QRMP scheme? For the other GST number, choose the monthly scheme. In Karnataka, it wants to choose QRMP scheme. In Kerala, it wants to choose monthly scheme. Is this possible? Assuming the aggregate turnover of ABC Limited, the PAN-based turnover of ABC Limited is below 5 crores in the preceding financial year. Now friends, the question is simple. Can I choose QRMP scheme GST number wise, or QRMP scheme has to be chosen PAN number wise the way it was there under composition scheme? Under composition scheme, if you are choosing composition scheme, you will have to choose it PAN wise. If you become ineligible for composition scheme for any of the GST numbers, you will have to quit from composition scheme from all the GST numbers which was there under single PAN. So under composition scheme, you take it or you leave it, it was PAN number wise. But friends, what about QRMP scheme? Can I choose QRMP scheme GST number wise? Let's have a look. What does the law say? Section 39. It says that every registered person needs to file a return on a monthly basis. Proviso to 39 subsection 1 tells you the government may, on the recommendations of the council, notify certain class of registered persons. A return needs to be filed every quarter. Who can file the return on a quarterly basis? So whom are they going to notify? They are going to notify a class of registered persons. So friends, this provision is applicable registered person wise. So friends, in our example what we have seen, ABC Limited has got 4 GST numbers. So there are 4 registered persons. Each registered person has got an option whether to choose QRMP scheme or to remain under the regular scheme. So friends, as regards as QRMP scheme is concerned, it can be adopted GSTN wise. It is not necessary that if QRMP scheme is being followed for one of the GSTNs in the entire PAN, all the GSTNs have to follow the QRMP scheme. It is not so. QRMP scheme can be chosen GSTN wise. Friends, if you could relate to the composition scheme under section 10, section 10 specifically told that composition scheme would apply PAN number wise, but there is no express and specific provision as regards as QRMP scheme is concerned. There is no provision which tells you that QRMP scheme has to be chosen PAN number wise. So friends, as regards as QRMP scheme is concerned, it is applicable registered person wise, and each of the GSTN is a different registered person. So each of the GSTN has got the liberty whether to choose composition scheme or to remain under the regular scheme. So friends, in this case what we had seen, ABC Limited, Tamil Nadu, GST 1 under QRMP, GST 2 under monthly, possible. Karnataka under QRMP, possible. Kerala under monthly, it is possible. Another scenario. Friends, let's say a registered person opts for QRMP scheme for the quarter April to June. Now friends, for the quarter July to September, can he switch over to the monthly scheme? His aggregate turnover did not cross 5 crores. Had it crossed 5 crores, he should have mandatorily come under the monthly scheme. His aggregate turnover did not cross 5 crores. Still he wants to come under the monthly scheme. Is it possible? Let's suppose he comes under the monthly scheme. From October to December, for the quarter October to December, he again wants to come under QRMP scheme. And thereafter, again for Jan to March, he wants to remain under the monthly scheme. So friends, the question is, can QRMP scheme be chosen quarter wise? Or once the QRMP scheme is chosen, you have to remain under the QRMP scheme for the entire financial year, excepting when your turnover crosses 5 crores, you have to come out. So friends, 2 questions. Can you choose QRMP scheme quarter wise, or you have to remain in QRMP scheme financial year wise? And of course, when it is crossing 5 crores, you have to come out. That is a different story. But at your option, if you want, can you come out of it and again get inside it whenever you want again? Friends, please have a look. Rule number 61. Rule 61A, it tells you the registered person intending to furnish return on a quarterly basis under proviso to 39 subsection 1 shall, in accordance with the conditions and restrictions notified in this regard, indicate his preference for furnishing of return on a quarterly basis on the common portal from the first day of the second month of the preceding quarter till the last day of the first month of the quarter for which the option is being exercised. I repeat again, it tells you a time slot of the first day of the second month of the preceding quarter till the last day of the first month of the quarter for which option is being exercised, which means that this QRMP scheme can be chosen quarter wise. If you're not convinced, let's have a look at it again. It tells you this scheme can be chosen from the first day of the second month of the preceding quarter till the last day of the first month of the quarter for which option is being exercised, which means that QRMP scheme you can choose it quarter wise. And friends, unlike you had in composition scheme where there was a specific condition that this composition scheme, you can come outside the composition scheme in between the financial year, but you cannot opt for the composition scheme in between the financial year unless you are a newly registered person. Friends, here there is no such condition. So therefore friends, QRMP scheme you can choose it quarter wise, provided you should have to opt for this QRMP scheme in the window which is available. The window which you already seen, for example April to June, between 1st Feb to 30th April you will have to opt for composition scheme, you have to opt for the QRMP scheme under this window. So friends, we have drawn two differences between the composition scheme and QRMP scheme. Rather, it is more important for me to understand these differences because in this entire video at 2 or 3 places I have interchangeably used composition scheme and QRMP scheme by mistake. So friends, now there is a difference between composition scheme and QRMP scheme. As regards as composition scheme is concerned, it is PAN number wise. As regards as QRMP scheme is concerned, it is GSTN wise. Opting in, it is a yearly affair to opt in. You cannot opt for the composition scheme in between the financial year. But friends, as regards as QRMP scheme is concerned, you can opt it for any quarter throughout the year. Quarter 1 QRMP, 2 regular, 3 QRMP, 4 regular possible. So friends, these are the two differences which one needs to keep in mind for you to remember this scheme in an easier manner. The two differences between composition and QRMP scheme. Now friends, the next discussion is, we understood that QRMP scheme can be opted quarter wise. Let's say for April to June, I am there under QRMP scheme. For April to June, when should I opt in the QRMP scheme? You know this friends, for April to June the ending point is 30th April, the starting point is 1st of February. So between 1st of February to 30th of April, I'll have to choose that I want to pay taxes under QRMP scheme. The question is not this. The question is, from July to September, I want to go into the monthly scheme. Now, I am already there under the QRMP scheme. From July to September, I want to start paying taxes on a monthly basis and file returns on a monthly basis. When should I opt outside the QRMP scheme? I repeat, for opting in, we have already seen the slabs. What is the slab or what is the window within which I have to opt outside QRMP scheme? Because only if you are going to opt outside QRMP scheme, you will be able to file your returns on a monthly basis. So now the question is, what is the slot which is available for opting outside QRMP scheme? Friends, there is a circular 143/13/2020 which states that the same window is available for opt out as well. The window which is available for opt in, the very same window is available for opt out as well. In our example friends, for the quarter July to September, he does not want to remain under QRMP scheme, which means that he wants to opt out of QRMP scheme. So now friends, for July to September, if he wants to opt outside QRMP scheme, what is the date? The date is friends, as regards as July is concerned, it is the ending point is going to be 31st of July. It is going to be 31st of July. What was the preceding quarter? The preceding quarter was April, May and June. Ending point for that was 30th of April. So the starting point for this is going to be 1st of May. So friends, he is operating under QRMP scheme for April to June. If for July to September he wants to come into the monthly scheme, which means that he has to opt outside QRMP scheme, when should he exercise this option? He needs to exercise this option in the one window of 1st of May till 31st of July. So friends, here we go. For July to September, 1st of May till 31st of July, if he wants, he can opt out the QRMP scheme. Friends, let's take a master example on the QRMP scheme. If you have understood this, or if you are able to answer this, you really do not require any revision. So now friends, let's say PJ Limited is registered in the state of Maharashtra and also in the state of Tamil Nadu. Now the particulars which are given are for the state of Maharashtra. PJ Limited converted from composition scheme to the regular scheme on 22nd of January. PJ Limited converted from composition scheme to regular scheme on 22nd of January. It wants to opt for the QRMP scheme for the quarter Jan to March on 26th of January. So now friends, point number 1, what is the window which is available for the QRMP scheme for the quarter Jan to March? For Jan to March, the window closes by 31st of Jan. When does he want to opt? He wants to opt on 26th of January. He wants to opt it on 26th of January. Is it possible? The answer is yes. Because the window is available till 31st of January, he wants to opt for QRMP scheme on 26th of January. Opting QRMP scheme is possible. After opting QRMP scheme, there are two methods, self-assessment method and fixed sum method. Can he go under self-assessment method? Yes, that is the default route which is always available. If QRMP scheme is available, self-assessment is also available always. Can he opt under the fixed sum method? Friends, he cannot opt for the fixed sum method for the reason that if you want to go under the fixed sum method, return for the preceding tax period, complete tax period, return for the preceding complete tax period needs to be filed. And which return, friends? 3B return for the preceding complete tax period needs to be filed. Now friends, in this case, has he filed any 3B return prior to his opting for the QRMP scheme? The answer is no, because he was there under composition scheme. So therefore, please follow carefully. Whether QRMP is applicable, the answer is yes, QRMP is available to him. Whether under QRMP fixed sum is available to him, the answer is no. The reason why it is no, because for the complete tax period, for the preceding complete tax period, GSTR 3B history is not available. What are you going to keep the base to compute the 100% or 35%? Therefore, fixed sum method is not available. Let's proceed further. He wants to continue in the QRMP scheme April to June. April to June, he wants to continue under the QRMP scheme. Should he opt in again? The answer is no, as we already know that once opted, until withdrawn again, it will remain in force. So for April to June, for the quarter, he is there under QRMP scheme, yes. Self-assessment available, obviously yes. Whether fixed sum is available. Now friends, what is the condition for fixed sum? For the preceding tax period, you should have filed the return for the complete period. Complete period means starting from the first day till the last day. Now friends, if you look into this history of this registered person, did he file a return for the preceding tax period? Yes. For the preceding tax period, was it monthly or quarterly? Quarterly. Quarterly starting from Jan to March. Now friends, for the quarter Jan to March, he did file a quarterly return, but did he file a return for the complete tax period? The answer is no. Answer is no, because he came into this regular scheme only on 22nd of January. So whatever GSTR 3B he would have filed, it would have been only from 22nd January till 31st of March. Prior to that, it would have been as GSTR 4, composition fellow. So now friends, as regards as this particular quarter April to June is concerned, QRMP scheme is available to him, self-assessment is obviously available to him, fixed sum method is not available because he doesn't have a historical data which can reflect his business transaction in the current tax period. Preceding tax period was Jan to March. Did he file a GSTR 3B for the entire Jan to March? The answer is no. He has filed 3B from 22nd January till 31st of March. So therefore, please follow friends, under fixed sum method, 1, data should be available. 2, it should be available for the complete tax period. Here data is available. but it is not available for the complete tax period. What was there in the quarter Jan to March? Why was he not eligible for fixed sum? Because in that case data itself was not available. There was no GSTR 3B which was being filed prior to Jan to March. Here in April to June, prior to April to June it is Jan to March. For Jan to March 3B is being filed, but still it is no because it is not filed for the complete tax period. Going further, July to September also it wants to continue under the QRMP scheme. Should he opt in again? The answer is no. He need not opt again. So July to September he can remain under the QRMP scheme. QRMP available, yes. Self-assessment available, yes. Whether fixed sum is available. Now friends, what is the preceding tax period? April to June. For April to June, did he file a GSTR 3B for the complete tax period? Yes. Fixed sum available? Yes. How much? 35% of the amount, because the preceding tax period was a quarterly tax period. 35% of the amount which was paid by debiting the electronic cash ledger of the tax period April to June. 35% in the first month, 35% in the second month. Third month, obviously self-assessment. Next, it wants to continue in QRMP for October to December as well. Should he opt in again? The answer is no, he can remain continued. But friends, it tells you the aggregate turnover crosses 5 crores. How are you going to compute aggregate turnover, friends? This PJ Limited is registered in Maharashtra and Tamil Nadu. You have to check the aggregate turnover of both these. You have to check, when you are going to check the aggregate turnover, you have to take the turnover of both these GSTNs. So here the aggregate turnover crosses 5 crores on 15th of November. So when it is going to cross on 15th of November, does it mean that he has to come outside the QRMP scheme midway? The answer is no. He can continue in the QRMP scheme for this quarter. In the current quarter, the aggregate turnover has exceeded 5 crores. From the next quarter onwards, he will not be eligible for QRMP scheme. So October to December, QRMP available, yes. Fixed sum, yes. Sorry, self-assessment, yes. Fixed sum also, yes, because he has got a return which is being filed for a complete tax period in the preceding tax period. For Jan to March, obviously he cannot continue under the QRMP scheme because in this particular quarter, October to December, his aggregate turnover has exceeded 5 crores. So no QRMP scheme. When there is no QRMP scheme, there is no question of self-assessment, neither question of fixed sum. Next financial year, for all the quarters, QRMP is not available because when you want to opt for QRMP scheme in the next financial year, you need to check what was the aggregate turnover in the preceding financial year. In the preceding financial year, his aggregate turnover has already exceeded 5 crores, not available. QRMP scheme is not available for the next financial year. Let's take the state of affairs of Tamil Nadu. Please do not lose the track. PJ Limited was registered in the state of Maharashtra and also in the state of Tamil Nadu. We have analyzed independently for the state of Maharashtra whether it can operate under the QRMP scheme. If yes, whether fixed sum is available. This analysis was done independently. For the state of Tamil Nadu, the very same company. Let's have a look at the data. PJ Limited obtained a new registration in the state of Tamil Nadu on 2nd of March. So friends, this company has obtained registration on which date? On 2nd of March. For the quarter Jan to March, newly registered person, can it opt for QRMP scheme? Friends, for the quarter Jan to March, the cutoff time is 31st of Jan. This person has obtained registration on 2nd of March only. On 2nd of March, he can opt for QRMP scheme, but not for the quarter Jan to March. If he wants, he can opt it for April to June. So for Jan to March, QRMP not available. When QRMP itself is not applicable, where is the question of self-assessment or fixed sum? Next one, it wants to opt for QRMP for April to June. Return for the month of March is filed on 2nd of May. Very important data. Now friends, it wants to opt for QRMP on April to June. For April to June, what is the cutoff time? For April to June, the cutoff time is 30th of April. So if you want to opt for QRMP For the quarter April to June, you have to opt before 30th of April. But if you can remember, there was a condition. There was a condition prior to you opting for QRMP scheme. The condition was the date on which you want to opt for this scheme, the returns as due. The returns as due for the preceding tax period needs to be filed. Now friends, by 30th of April is the last date available for him to choose QRMP scheme for the quarter April to June. So whenever he is going to choose, let's suppose he wants to choose it on 30th of April. If he wants to choose it on 30th of April, by 30th of April, he should have filed the return for the month of March. He should have filed the return for the month of March. Has he done so? Friends, the data tells us March return is filed on 2nd of May. So therefore, for April to June also, QRMP cannot be opted. So it is no, rest are not applicable. Now comes July to September. He wants to opt for QRMP for July to September. He has opted the same on 22nd of July after filing June month's return. So friends, for July to September, can he opt by 22nd of July? Yes. For July, the cutoff date is 31st of July. So by 22nd of July, he can opt in. So QRMP is available. Obviously, self-assessment also available. Whether fixed sum is available. What does fixed sum tells you? Preceding tax period, 3B should have been filed for the complete tax period. What is the preceding tax period? Preceding tax period is June, because here April to June QRMP was not there, hence he was there under monthly return, hence the preceding tax period was the month of June. For the month of June, has he filed the return? Yes, the data tells you after filing June month's return. So therefore you have a history based on which you can rely, which is going to indicate your business transactions in the current month. So therefore, yes, fixed sum is available. Whether it is 100%, 100% or 35%, 35%. Friends, as we discussed, preceding tax period was a monthly affair. He has filed a monthly return for the tax period June. So therefore, since he has filed a monthly return, the amount which he needs to deposit in the electronic cash ledger for the first 2 months of the quarter, which is July and August, is going to be 100% of the amount which he has paid, or 100% of the amount which has got debited from the electronic cash ledger. That amount he has to pay it in each of the 2 months. He has to pay it in July as well as in August. So it is going to be 100%, 100%. Coming to the next quarter. He wants to continue in QRMP for October to December as well. No problem. Nobody is stopping him. Does he want? Should he opt in again? The answer is no. Once opted in, he will continue in it. Aggregate turnover, as we had just studied in the preceding question, crosses 5 crores on 15th of November. Can he still continue under the QRMP scheme for the quarter October to December? Yes. October to December, QRMP available. Self-assessment available. Fixed sum available. But now friends, the preceding quarter was a quarterly return. July to September was a quarterly return. So therefore, first month what he has to pay, 35% of the amount which is paid by debiting the electronic cash ledger in the first month, the same amount in the second month as well. So now it is going to be 35%, 35%. It cannot continue in QRMP. It cannot continue in the QRMP for the next quarter, Jan to March, because in the preceding quarter the aggregate turnover has crossed 5 crores. So therefore QRMP is no. When there is no QRMP, there is no question of self-assessment or fixed sum method. In the next financial year, for all the quarters, QRMP is not available because in the preceding financial year, aggregate turnover has crossed 5 crores. So friends, if you are able to answer this, if you are able to recollect the provisions by looking into this example, it is more than sufficient. In these two examples, we have tried to cover maximum revision of all the provisions which we have studied so far. Friends, I know it has been a very long discussion regarding the QRMP scheme. Let's have a quick recap. Let's have a master revision of the QRMP scheme. Friends, if you remember this, the concepts have already synced in your mind. So friends, the story so far. It is actually not the story so far. The story completes in the next few moments. Friends, returns could either be monthly or it could be quarterly. If it is monthly, you have details of outward supplies GSTR 1. The due date is 11th of the subsequent month. GSTR 3B, the due date for filing the returns is 20th of the subsequent month. The due date for payment of taxes is 20th of subsequent month. Friends, if the returns are quarterly, the details of outward supplies. For the first and second month of the quarter, invoice furnishing facility is available. Due date is 13th of the subsequent month. In IFF, only B2B invoices could be furnished, that too only up to value of rupees 50 lakhs. It is optional. It is your choice which invoices you want to disclose, which you do not want to disclose. All those which are disclosed in IFF need not again be disclosed in GSTR 1. And the balance which is not disclosed in IFF, be it B2C or be it at your choice, if you have left something, or be it the value was exceeding 50 lakhs, you are not in a position to disclose it. All these residual factors would come in GSTR 1 of the quarter. The due date happens to be 13th of the subsequent month. So friends, as far as a QRMP fellow is concerned, for him the details of outward supplies standard date is 13th. For the first month 13th, second month 13th, third month also 13th. Return, the quarterly return, as regards as return is concerned, for category A states 22nd of the month following the end of the quarter. For example, April, May and June, it is going to be 22nd of July. For category B states, it is going to be 24th of the month following the end of the quarter. You need not memorize which states are in category A and which one are in category B. As regards as payment is concerned, for the first and the second month, it is 25th of the subsequent month. For the third month, it is going to be along with the return either 22nd or 24th based on the category of states. QRMP scheme can be followed or it can be opted for GSTN wise. QRMP scheme can be opted for GSTN wise, and I could add another point over here, it is quarter wise. QRMP scheme can be opted GSTN wise and quarter wise for various quarters in a financial year. For various quarters in a financial year, you can switch over between QRMP scheme and the regular scheme. Of course, within the window which is available, you have to exercise the option. So eligibility, those registered persons whose aggregate turnover in the preceding financial year is up to 5 crores, they are eligible for the scheme. What are the conditions for opting? Return for the preceding month as due has to be filed. Option once exercised shall be valid for future tax periods until revised. Friends, you have to be very careful. There are certain conditions which are there for opting QRMP scheme, and there are certain conditions which are there for opting the fixed sum method under the QRMP scheme. Please do not get confused between them. Friends, as regards as the return of the preceding month as due has to be filed, that is a condition for opting the QRMP scheme. But friends, under the fixed sum method, there is a condition that the return for the preceding tax period, GSTR 3B needs to be filed for the complete tax period ranging from the first day till the last day. So that was the condition under the fixed sum method of QRMP. This is a condition of opting the QRMP scheme itself. Do not interchange them. Do not get confused. So friends, as regards as the condition for opting the QRMP scheme is concerned, return of the preceding month as due has to be filed. It is not talking about that the return of the complete tax period needs to be filed. It simply tells return of the preceding month as due has to be filed. Friends, please be very careful. There is a huge difference between opting for the QRMP scheme and opting the fixed sum method under the QRMP scheme. Both are different. Only when you come inside the QRMP scheme, the question arises as to whether self-assessment or fixed sum. Aggregate turnover of the current financial year. Once the aggregate turnover crosses rupees 5 crores in a quarter, QRMP scheme shall not be eligible from the succeeding quarter. When to opt in and opt out for a quarter. So friends, from the first day of the second month of the preceding quarter till the last day of the first month of the quarter for which the option is being exercised. This window we have seen multiple times. So now friends, once QRMP scheme is opted, there are two methods. Regular method, which is a self-assessment method, or the fixed sum method. You are at liberty to choose fixed sum method either in the first month or in the second month or in the both months. It is your choice. What is self-assessment method? The simple one, what we usually do, it is output tax less input tax credit. For the first and the second month, as we know, deposit needs to be made in the electronic cash ledger. So you calculate the self-assessed tax, deposit it in the cash ledger. If there is any delay in the deposit, interest will be payable at the rate of 18% for the period of delay. Friends, for the third month, it is going to be not a deposit in the cash ledger. In the third month, you will have to pay the taxes along with the return filing which you are going to carry out either by 22nd or 24th of the month following the end of the quarter. Special procedure in the fixed sum method. Payment of tax for the first and second month. Friends, please understand, fixed sum method option is available only for the first and second month of the quarter. For the third month of the quarter, it is always self-assessment basis. So if the preceding tax period was a quarterly, for the first and the second month, the amount which needs to be paid is 35% of tax paid by debiting the electronic cash ledger in the return of the preceding quarter. If the preceding tax period was monthly, 100% of the tax paid by e-cash ledger in the return of the preceding month. Above amounts is not required to be paid if there is adequate balance which is available in the cash ledger or credit ledger. In the first month, you will have to see the balance. In the second month, you will have to compare the cumulative liability of the first and the second month and then check the balance of cash ledger or credit ledger to decide whether any additional deposit is required or not. If there is nil liability, you need not deposit any amount even under the fixed sum method. Special procedure is available. This fixed sum method is available only if there is a condition, only if the return, which is GSTR 3B, has been filed for a complete tax period preceding such month. So for the preceding tax period, for the complete tax period, GSTR 3B should have been filed. Interest is payable, yes, for the first and second month. If there is any delay in deposit in the electronic cash ledger, interest is payable. For the third month, if there is any delay in payment of taxes, interest is payable at the rate of 18%. Now friends, we have discussed everything. Almost the QRMP scheme is over. Just one more additional point. The point is what we have discussed. In case if there is an adequate balance which is available in the cash ledger or in the credit ledger, or if there is nil liability, which means I have not made any outward supplies, under the fixed sum method, I need not pay any amount. I need not deposit any amount in the cash ledger. Friends, the question is whether this benefit is available only for the fixed sum method or it is also available under the self-assessment method. I repeat the question, whether this benefit of not to pay anything if there is an adequate balance in the cash or in credit ledger, or if there is nil liability, these benefits, are they available, are they exclusive only to the fixed sum method, or they will also extend to the self-assessment method. Friends, please concentrate. If you are under self-assessment method and if you find out that for a particular month you have not made any supplies, obviously even by self-assessment you will get the answer as 0 only. I repeat, if for a particular tax period you have not made any outward supplies, obviously even under the self-assessment you will get the answer as 0 only. So this one, if there is nil liability, you need not pay anything under the fixed sum method, has to be specifically told, because otherwise he would have paid it as a percentage of the amount which was paid by debiting the electronic cash ledger in the preceding tax period. So here it was specifically required. But as regards the self-assessment is concerned, it is implied, it is deemed. If there is no outward supplies, my self-assessment tax itself is nil, why would I deposit? So this one, yes, available for fixed sum, also available for self-assessment. The next one, the first one, if there is adequate balance which is available in the cash or in credit ledger, this is specifically told in fixed sum method. However friends, it is also applicable for self-assessment method. What does the law require? The law requires me to deposit an amount in the cash ledger. If already I am having sufficient balance in the cash or in the credit ledger, why should I make an additional deposit? So friends, logically it should also be applicable for self-assessment method. And friends, there is a circular which clarifies this, circular 143/13/2020, which states that if there is an adequate balance which is available in the cash or in the credit ledger, then the deposits in the first and second month is not required to be made even under the self-assessment method. So friends, now I just rearrange the slides. The slides would look something like this. Regular or the self-assessment method, these are the points. Fixed sum method, these are the points. And at last you have for both the above methods, be it self-assessment, be it fixed sum. No deposit is required if, no deposit for the first and second month is required if there is adequate balance available in the cash or in credit ledger, or there is nil liability. By this, we close the entire discussion on QRMP scheme. Friends, as we understand, GSTR 1 and GSTR 3B. Friends, as regards as GSTR 1 is concerned, or for that matter IFF is concerned, it is nothing but a details of outward supplies. The government doesn't get any revenue out of it. As regards as GSTR 3B is concerned, it is a summary return which needs to be filed either monthly or quarterly. The government gets the revenue when GSTR 3B is being filed. And friends, please also remember, even if a person is there under QRMP scheme, whatever deposits he is making in the first and second month of the quarter, that only remains as a deposit in the cash ledger. The government could get revenue, or that amount would belong to the government only when GSTR 3B is being filed, and that amount is getting debited from the electronic cash ledger. So friends, the government is interested in 3B being filed. Please understand. The government is interested in 3B being filed because only then the revenue comes to the government. But friends, as regards as your customer is concerned, for a registered person, as regards as his recipient is concerned, his customer is concerned, he is more interested when GSTR 1 or IFF of the supplier is being filed, because only then the recipient is in a position to get the credit. Now friends, the government wants to use this to its advantage. Government interested in 3B, the recipient of the supply interested in GSTR 1 or IFF being filed by the supplier. Government interested in 3B because government gets the revenue. Recipient interested in 1 or IFF being filed by the supplier because the recipient is going to get the credit. The government now wants to use this position to its advantage. The government states that if GSTR 3B is not being filed, if GSTR 3B is not being filed, the government will not allow you, the portal would not allow you to file GSTR 1 or IFF. So now friends, the government is trying to threaten you in various ways so that you file your GSTR 3B within time. 1. Interest would be levied for delayed filing. There would be interest would be levied for delayed payment of taxes. There would be late fees for delayed filing of return. The government would threaten that it could cancel your registration. These are the threats which the government is giving directly, that if you do not file 3B, interest would be payable, late fees would be payable, and your registration may also be liable to be cancelled. The indirect threat, rather than which is more a powerful threat, is the government is saying, if you do not file 3B, I would not allow you to file GSTR 1 or IFF. Now what happens? You do not file 3B, you are not in a position to file 1 or IFF. When you are not in a position to file 1 or IFF, all the B2B supplies which you have made to your recipients, they all start pressurizing you. So the government puts pressure from various sources to check that GSTR 3B is being filed with the time limits. So now friends, which are those cases where, or what is the provision which states that if you do not file 3B, 1 or IFF will not be allowed to be filed? Let's have a look. Rule number 59, sub rule 6. As we all studied friends, section 37 read with rule 59. It is for details of outward supplies. Notwithstanding anything contained in this rules, notwithstanding anything contained in this rule, which means that otherwise this rule is saying that every registered person has to file GSTR1. But in these cases, we will see that the registered person is not allowed to file GSTR1. A registered person shall not be allowed the details of outward supplies in GSTR1 if he has not furnished the return in form GSTR3B for preceding 2 months. So friends, for preceding 2 months, if you do not file GSTR3B, GSTR1 will not be allowed to file. Now friends, this spoke about GSTR3B not being filed for preceding 2 months. What about those persons who file GSTR3B on a quarterly basis? Let's have a look. A registered person, notwithstanding anything contained in this rule, a registered person required to furnish a return for every quarter under Proviso 239 subsection 1 shall not be allowed to furnish the details of outward supplies in GSTR1 or using the IFF if he has not furnished the return in form 3B for the preceding tax period. What is preceding tax period? It is quarter. So friends, as regards as monthly fellow is concerned, if he has not filed 3B for the preceding 2 months, he will not be allowed to file GSTR1. As regards as a quarterly fellow is concerned, if he has not filed his GSTR3B for the preceding 1 quarter, he will not be in a position to file GSTR1 or furnish invoice or file IFF. The third point, a registered person who is restricted from using the amount available in the electronic credit ledger to discharge his liability towards tax in excess of 99% of such tax liability under Rule 86B shall not be allowed to furnish the details of outward supplies in one or using the IFF if he has not furnished the return in Form 3B for the preceding tax period. What it is trying to say, friends, for those registered persons for whom Rule 86B is applicable, for those registered persons for whom Rule 86B is applicable. What was Rule 86B? At least 1% of your liability should be paid from electronic cash ledger. So friends, for those persons for whom Rule 86B is applicable, if they have not filed their GSTR 3B for the preceding one tax period, in those cases, GSTR 1 or IFF is not going to be allowed. So friends, what is the difference between A, B and C? Friends, the third point is wherever Rule 86B is applicable, in case if for the preceding one tax period, if 3B is not being filed, GSTR 1 or IFF is not going to be allowed. What is this A and B saying? So friends, when C specific about 86B is applicable, which means A and B is silent about 86B. So we can take an inference that A and B is a case where Rule 86B is not applicable, it is A and B. Wherever Rule 86B is applicable, it is C. So friends, what is the conclusion? The conclusion is, if Rule 86B is applicable, GSTR 3B is not filed for preceding one tax period, GSTR 1 or IFF cannot be filed. Wherever 86B is not applicable, then for monthly filers preceding two tax periods, if 3B is not filed for preceding two tax periods, 1 or IFF is not going to be allowed. For quarterly filers, if GSTR 3B is not being filed for preceding one tax period, then GSTR 1 or IFF is not going to be allowed. Let's take example, friends. Let's say the person is a regular person, which means is not a QRMP fellow. Rule 86B is applicable. Friends, the moment Rule 86B is applicable, it is preceding one tax period. If GSTR 3B is not filed for April, will he be allowed to file GSTR 1 for May? The answer is no. The fellow is under QRMP, Rule 86B is applicable. The moment Rule 86B is applicable, preceding one tax period. If 3B is not filed for Jan to March, GSTR 1 for April is not going to be allowed. Again, QRMP fellow, Rule 86B is applicable. Now, if 3B is not filed for Jan to March, can GSTR 1 for May be filed? Answer is no. Regular fellow, Rule 86B is not applicable. So friends, when 86B is not applicable, you need to bifurcate them into two: regular, QRMP. For regular 2 tax periods, QRMP 1 tax period. So regular fellow, Rule 86 is not applicable. 3B is not filed for Feb and March. Then for April, 1 or IFF cannot be filed. QRMP fellow, 86B not applicable. If 86B is not applicable, bifurcate them into two: monthly and quarterly. For quarterly, it is preceding 1 tax period. If 3B is not filed for Jan to March, GSTR 1 for or IFF cannot be filed for April. So friends, this is the summary. If Rule 86B is applicable, if 3B is not filed for preceding 1 tax period, 1 or IFF cannot be filed. If Rule 86B is not applicable, bifurcate them into two. In case of monthly filers, if for preceding 2 tax periods 3B is not being filed, 1 IFF is not going to be allowed. For quarterly fellows, for preceding 1 tax period, if 3B is not being filed, filing of 1 and IFF is not going to be allowed. So now friends, having discussed this, the registered person is forced to file GSTR 3B so that he is in a position to file 1 and IFF, so that his recipient is in a position to take the credit, so that the pressure from the recipients comes down, so that he is in a position to continue his business. Now having discussed this, the registered person now thinks, it says I need to file 3B. It says I need to file 3B. If I do not file 3B, I cannot file 1. If I do not file 1, I will lose business. 1, I have to file correctly because I might have made B2B supplies for 50 lakhs. If I file 1 wrongly, stating only 10 lakhs, my recipients cannot take credit. My recipients are going to follow me up. I am going to lose the business. In order to keep my recipients happy, in order to keep me running in the business, I will have to file 1 correctly. Agreed. But my recipients are not bothered about 3B. My recipients are not bothered about 3B. 3B, whether I am filing, not filing, they are least bothered. All that they want is I should file 1 or IFF, credit should come in there 2A, 2B. So let me do one thing. I'll show the actual turnover in GSTR 1 or IFF. But as regards as 3B is concerned, since I am falling short of money, I cannot pay the taxes now to the government. Let me slightly tweak 3B. Let me show the actual turnover in 1. In 3B, I'll divert. I will diminish the turnover in 3B and I'll show, so that whatever is the amount of tax which I am having, to that extent, whatever is the amount of tax which I am willing to pay, to that extent I'll show the turnover in 3B. Anyways, my recipient is not bothered. What does the rule say? You should file 3B. It doesn't say you should file correct 3B. If I file 3B, automatically in this case I am able to file 1 or IFF. Will the government leave just like that? The answer is no. Let's revisit the grounds for cancellation of registration. The grounds where the proper officer can suo motu initiate cancellation of registration. It says, if a registered person furnishes GSTR 1 for 1 or more tax periods which is in excess of outward supplies declared by him in his valid return under section 39 for the said tax periods, the registration is liable to be cancelled. So friends, the summary is, Rule 59 forces you to file GSTR 3B. Rule 59 forces you to file GSTR 3B. How come? Rule 59 says, if you do not file 3B for the mentioned tax periods, I would not allow you to file GSTR 1 or IFF. And if you do not file GSTR 1 or IFF, your customers are going to come against you. You are going to lose business. So therefore, Rule 59 forces you to file GSTR 3B, and Rule 21 forces you to file GSTR 3B correctly. Rule 21 forces you to file GSTR 3B correctly, because if you do not file it correctly, if you include the actual turnover in GSTR 1 and depreciated turnover in GSTR 3B, now is a case where the turnover or the outward supplies as declared in GSTR 1 for 1 or more tax periods is in excess of outward supplies which is declared in GSTR 3B, your registration is liable to be cancelled. So friends, Rule 59 forces you to file GSTR 3B. Rule 21 forces you to file GSTR 3B correctly. Ultimately, what the government wants is you file your 3B within time, give us the revenue within time. Please be peaceful and happy. So friends, the consequences of not filing or wrongly filing GSTR 3B. The consequences of either not filing 3B or wrongly filing 3B. Here we go. Assuming if GSTR 3B is filed, if GSTR 3B is filed, if GSTR 1 is greater than GSTR 3B, grounds for cancellation. If GSTR 3B is greater than GSTR 2B, if you have taken credit in violation of Rule 36 sub Rule 4, your registration is liable to be cancelled. Did you notice this? Let's have a relook. It says, point number E, if a registered person avails input tax credit in violation of the provisions of section 16 or rules made thereunder, the registration is liable to be cancelled. So friends, if 1 is greater than 3B, cancellation grounds. 3B is greater than 2B, cancellation grounds. Rule 86B is not complied with, cancellation grounds. So if you file 3B but it is not filed correctly, it is a grounds for cancellation of registration. If GSTR 3B is not filed at all, either you file it wrongly or you do not file at all. If GSTR 3B is not filed at all, if it is not filed for a continuous period of the specified months, a regular person doesn't file GSTR 3B for a continuous period of 6 months, cancellation of registration. It is again a ground for cancellation of registration. The next one, if GSTR 3B is not filed, if GSTR 3B is not filed and where 86B is applicable, then if you do not file GSTR 3B for one tax period, you cannot file GSTR 1 or IFF. If 86B is not applicable and you do not file GSTR 3B for 2 months or for 1 quarter, in case of quarterly returns, you will not be in a position to file GSTR 1 or IFF. So friends, these are the various sources, these are the various tactics which the government is using to pressurize the registered person in order to file his GSTR 3B within time, so that the government gets its revenue within the time and the machinery keeps running.
Subscribe to LearnCab and hit the bell icon to get notified.